spreads are substantially wider, but we're probably nowhere close to actually pricing in a recession. If you look at U.S. investment grades spreads on your Bloomberg index, we're around 120 basis points. That usually gets to 140, 150, even outside of recessions. If you're going to enter a recession, you're talking about 200 basis points. So the credit market is under pressure, but it's still nowhere close to discounting a proper recessionary environment. It's actually only over the last couple of days, for instance, that the markets began switching focus from pure tariff concerns, like autos, like you mentioned, pharmaceuticals earlier, and started to focus on the real cyclicals, including financials, for instance. And cyclicals have started to underperform only in the last couple of days.
Victor, if we're going to see vulnerability in the credit markets, where do you think we'll see it first? Will it be in the short-term paper side, or will it be in longer-term issuance? If we do see some pain, where would you see it first?
So the one thing that's different today compared to, let's say, 2022, which was the last time we had volatility and spread widening, is on the borrower side. So back then, high-yield companies had taken advantage of the easy funding conditions during the COVID stimulus and extended their bond maturity profiles. This time around, they have a little bit less leeway. The bond maturity walls are probably 3 times what they were back then. So my guess is that we stay here for another few months. It's going to be the leveraged finance space that starts to look vulnerable. That's not the story today, but it will get there if we stay here.
Don't be a stranger. Thank you so much. I'd like to do the interview in French, but that really wouldn't.
Yeah, that would really work out well.
That would work out well. Victor Yeoh, thank you so much with BNP Paribas Paris out of London this morning to get us started. The news flow is like light speed. Sweeney fell off his chair during the interview. Paul, you were looking at oil.
Yeah, Rich pointed that out. WTI crude oil down 6%. $55.89 a barrel.
Right.
That is, basically the cost of production. That is now getting everybody's attention in the oil patch.
Tick for tat tariffs. We are thrilled to bring you for the second day in a row. I think it's just too much, Damien Sassower, and he joins us this morning. Damien, I want to go. There's so many ways to go on our 1-hour conversation with you, but let me start with this. Renminbi is CNY in Beijing, managed in that. Yep. And offshore is the Sassower pair, which is USD CNH, which is the offshore. The spread is, as well, Kaminsky had this today, and I agree with her, that the difference between the onshore managed renminbi and the offshore renminbi is the litmus paper of the Asian system now. What does it say about the Pacific Rim?
Well, I mean, it's just one of many metrics. I mean, look, but you're absolutely right. CNH, CNY spreads are blowing out, but it's really about the spread from equities to intermediate credit spreads in the U.S. to funding money market spreads. So in the past, in COVID, we had central bank swap lines coming from the Fed to countries like Mexico, Brazil, Asia. I mean, that's not going to happen this time around if we have plumbing, if there's cracks in the system.
Folks, this is an unfair question to Mr. Sassower, but I'm going there this morning. There is in the zeitgeist, not you, but the idea that the central bank will have to step in as they did in a health pandemic, COVID. Do you anticipate Jerome Powell having to act here, given all you see on the Bloomberg?
I mean, I don't know if he can, right? I mean, let's just think about, these tariffs are designed to punish these economies, and now what? The Fed is going to rush to their rescue by providing them with dollar liquidity in times of stress? I just don't know how they're going to pass that one through. Look at Argentina.
I agree.
Overnight, the Trump administration was criticizing Javier Milei, who is a supporter of Trump, for the country's swap line with the PBOC, with China, which is the country's largest source of foreign reserves. Think about this. Right. So Argentina, the Argentina friend of Trump trade, this was, in vogue just a few weeks back. Now it's being thrown on its side. Right. Just a few weeks ago, Tom, prior to April 2nd, 16 of 21 emerging market currencies were up versus the dollar. Now it's exactly the opposite. Right. The whole world has flipped over. But in G10, you're still seeing broad dollar weakness. The dollar is still weak relative to the euro and the yen and the Swiss franc, et cetera. So, something is amiss here.
I want to make this clear for Paul, jump in here, but Terry Weissman coming up with this, experience at Bear Stearns, and we have Damien Sassower with his experience at Lehman Brothers.
Tom, flight to safety, gold up $74 here, 3,064. Thanks, Rich. So again, we're seeing some real real moves across markets, across asset classes. How do emerging markets view U.S. Treasuries today, Damien?
So today at 11:30, I have a call with Fabio Nattalucci. He was
With
the
who?
former deputy director of the IMF's Monetary and Capital Markets Division. So he literally wrote the book on, funding spreads, the financial plumbing, cracks in the system, et cetera. He's now CEO of the Anderson Institute. And I know now he can tell me because he's no longer with the IMF, that the IMF has been receiving requests from across the emerging markets, specifically the frontier, specifically Africa. We froze U.S. aid. Right? So that's gone, any source of revenue. And then now basically you're getting requests from countries like Nigeria, Kenya, Senegal that, the IMF, hey, can you come and bail us out effectively? And again, I don't know if they even have the funding in a Trump-led world to provide them with with the dollars they need in order to get through this. So, it's going to be very, very challenging. And you're seeing that, my God, in U.S. 2-year swap spreads and U.S. dollar cross-currency basis swap spreads. They are collapsing as we speak. I mean, it's just, it's blood.